Jamie, Zinks, thank you very much for joining me. It's been a while since I've spoken to you, Jamie. Zinks not so long, but it's the first time we've all been on at the same time, so this hopefully will be a good discussion.
Yes,
Mm.
lots to talk about. So looking forward to it. And thanks for setting it up, James.
No worries. Let's start with, I guess, the bit that Andy in the comments already doesn't want me to talk about, but the state of the sector and what's kind of going on right now. Jamie, do you want to start and see what are your thoughts on what's going on, maybe
Well, yeah,
why?
well, I was actually going to hand it over to Zinks, and the reason for that, sorry, not to pass the buck, was that I've been at Digital Asset Summit for the last 3 days, so I was going to get him to sort of give his view because he's very much been had a holistic view of the other treasury companies, and I was just going to come in over the top with some additional feedback. Would that be okay?
Yeah,
Sure.
that's fine. No worries.
Sure.
Obviously, we've seen a period of MNAV compression, which has started since, the end of June, really. We've had severe MNAV compression across the board. It's not just Smarter Web, MetaPlanet, Capital B, all the Bitcoin treasury companies, really. MSTR's trading, under $300. Um, even more recently, we just had a massive crypto liquidation event. A lot of people were, sort of leverage trading 10x, 20x, millions of dollars on these altcoins. And then, Trump came out talking about tariffs on China again. And, we saw a liquidation cascade. Of course, that was only more recently. We've been going down since the end of June. We've been seeing MNAV compression. As for the reasons why, I think, we probably had a lot of exuberance in the space, a dilution in the sense of, so many new Bitcoin treasury companies in the UK, for example. We've had, since the announcement of Smarter Web, we've had 20 plus companies. So I think people were just fatigued, and eventually we saw a rotation of capital. I've made a post that shows essentially since the end of June, some of these Bitcoin mining / AI plays, for example, Iron is up 400%. And previously, the miners were down in the dumps for 12 months plus. So I think what we're seeing is a rotation of capital into the miners, and just people essentially, over the hype, the initial hype of Bitcoin treasuries. And now, you know, people just have a lot more questions. The scrutiny is a lot higher. It doesn't help that, the Bitcoin price has been muted as well. You know, uh, as I said to you before we came live, Bitcoin is currently underperforming the S&P 500 year to date. Gold has been on an amazing run. So I think capital is just interested in other things right now, to be honest.
Yeah. Completely agree with all of those. I think the one piece of feedback I've really had from speaking with retail and institutional investors is it's really the scope or the velocity of the compression that's taken people by surprise. Naturally, everyone has an understanding that we do go through these cycles in terms of the compression and the expansion of MNAV. But I think the rate at which the MNAVs compressed from double digits to low single digits effectively within the space of 2 to 3 months took everyone by surprise. And that includes, what we call some of the leading analysts within the spaces or people that have very strong voices. And not just within Smarter Web, but within some of within the other leading companies as well. I think one of the things that's obviously been a little bit frustrating, like you said, is that right at the same time there has been a big shift in terms of attention to some of the Bitcoin miners and AI plays. And over the summer, when we had that strong period of over the summer, when we had that period of low volatility, specifically during the month of August, there was sort of what felt like some forced capitulation that was going on in a low liquidity environment that compounded the moves. And then subsequently, I do feel, unfortunately, the MetaPlanet international offering, whilst it was, longer term, could still be constructive for them, and they added a lot of Bitcoin on the balance sheet, there was some some questions around the execution of the deal, and that just obviously was a sort of a net negative for sentiment. And I think, again, as Zink said, people probably felt a little bit too overexposed to the sector. And certainly, I do think there has been some opportunistic buying on the way down. But again, I do feel some of that has then subsequently ended up being cut, because I think people really didn't expect to see us go back to effectively 1 MNAV. You know, people started to buy in when it was 2, etc., or 3, low single digits. And so again, some of that opportunistic money has come out. But the one thing I do think that we can count on is the fact that everything within crypto is cyclical, especially Bitcoin. And whilst we have been in that sort of sideways period where it really hasn't done anything apart from, you know, effectively last Friday, which was headline driven, over the course of the next couple of months, I do feel we're in a constructive place to move higher. And that's predominantly driven by one, again, I don't have a strong view on this, but if we get some positive announcement on the trade tariff headlines for US and China, and two US rate cuts to come, probably at the end of December, and one in December, sorry, end of October, and one in December as well, both of 25 bips, which should, I think, you know, help push us higher into the year end, especially because a lot of the leverage has been taken out the system as well. And one of the key things to remember for funds is once you've gone through a significant period of de-risking, people get very worried coming into year end when they feel underexposed. And the reason for that is because there's only a couple of months within to catch up. If the index moves extremely high over the course of the next couple of months into year end, they all have to chase it to make sure that they're at least benchmarked to the index performance. So I think the setup could be constructive. And, you know, from my perspective, that really is going to be what kickstarts sentiment coming back into the sector.
I'd just like to add also the pipe unlocks in the US. I think
Good point.
that's not, you know, done any favors. You know, we've seen multiple now. These companies just completely, you know, crash and just look like pump and dumps, to be honest. You know, down 96% and then going down a further 25%. It's going to kill sentiment. And yeah, I think people are just reeling from that as well. So overall, the space is just, you know, far from, you know, in a good place right now.
Yeah.
Yeah, I mean, just to add my sort of 2 pennies at the end is, if you look at how hot the space was running, you know, May, June time, it was going to correct. Now I don't. Some people obviously saw it coming because they will have sold the top and walked away very happily. But I certainly didn't see it coming. Well, I saw that there would be a correction, but I didn't think it would be a 3 to 4 month correction, and certainly didn't think we'd be going down to levels that we've come to. But that said, looking back in hindsight, it's 2020. The chart kind of shows it was likely to happen, but we can only tell that in hindsight. Obviously, money's still in miners. I think, you know, they run first, Bitcoin runs second, so Bitcoin's due a run perhaps, but we'll get onto Bitcoin in a bit. So I'm hopeful of a rotation of capital back into the space. Well, certainly before the end of the year, anyway. Hopefully.
Yeah, I mean, yeah, I mean, for instance, I mean, you know, sorry, James, I mean, gold has, everyone's been clearly watching the gold chart, which, you know, has tended historically to be a lead indicator. And I know that's got its own reasons for strong outperformance. But again, I do think it's another potential indicator that the setup is constructive going into year end.
Yeah.
Yeah.
So we are where we are. I think we're comfortably sub 1xm NAV now. What do you guys see? You know, Jesse and Andrew have sort of hinted at some things, but what do you see as the realistic options that SWC have got to, you know, get it going again?
I've been thinking about this, and I think the last thing I want to see is any bad capital raising. I think with the space where it is at right now, I just, the last deal, people had their opinions. It wasn't my favorite deal, but I accepted it. I think, I wouldn't want to see something like that right now. But what we can do, and of course it depends on demand, is two things. Obviously, we've got Smarter Convert, but I don't know if the demand for that is there right now. Probably isn't, to be honest, if I'm thinking about it. And then the other thing is just taking on traditional leverage. I think there's definitely room for Smarter Web to take on quite a bit of leverage. You know, if you count the Smarter Convert, or if you don't, it's still just either no leverage or just a small percentage, anyways. And I think there's room for us to definitely ramp that up.
Yeah, I completely agree. I think, one of the things that Zinks mentioned that's worth focusing on is that I think the community's got a good understanding of like what we don't want in terms of fundraising. And so that's, discounted equity raises. Again, to reiterate what he said, I know there was some two-way discussion around the previous raise. From my own perspective, for what it's worth, I thought it was constructive, and it helped to get another 100 Bitcoin onto the balance sheet. What's needed now feels like some form of debt to help us lever up. And one of the good things for us is that we have, 2,600 odd Bitcoin on the balance sheet, which can be used as collateral. Smarter Web have now extensive relationships with a variety of different people within crypto that potentially could allow for that to be used as collateral for some form of debt financing. There's conversations that can be had with traditional banks or traditional managers to provide some form of debt financing against the Bitcoin as collateral, and really to try to make it as sort of long duration as possible, with as little with the interest rate as low as possible, that's then compounded or eroded by the effective compounded annual growth rate of Bitcoin. And so really that for me is where we can start. I think it probably feels like a good opportunity to now start looking at that to lever up. And certainly perspective, that would be the next constructive move.
Okay, so yeah, using debt to lever up, fine. What sort of ways would you guys look at if you were Andrew or Jesse?
So I think of this as, what would I do as an individual? Firstly, the options that are available to us as individuals. Theoretically, we can put our Bitcoin up as collateral. Even Coinbase do it. I think they do have a limit of only like $1 million. But let's say if you wanted to put your Bitcoin up as collateral, I think you can actually get perpetual loans. And I think there's some companies that do it at less than 10%, so essentially kind of similar to, the prefs in a way. So if the company is able to do that, obviously, they have different options available to them. I would be very happy and comfortable with, putting 25% of the Bitcoin or, something like that as collateral, taking on some sort of perpetual debt, at less than 10%, and then just using that to buy more Bitcoin. That's obviously other than the Smarter Convert. I think that would be the, number one way issue, equity at a premium, longer duration. If we look at Capital B, I think half of their Bitcoin was acquired in that way, issued at around 30% premium, and at 5-year duration. So either one or either of those options, I'd be very happy.
Sorry, guys, can you hear a big punch from audio? Was there some crackling going on in the?
You're doing quite badly.
Yeah, is that coming from me or
from you?
I wonder why. Can you hear me now?
No, it's fine when you start.
Yeah, I've got no phone here, so just trying to understand why it's not working. Is that coming across a bit clearer? Apologies. Let me just leave. Can I leave and come back?
Yeah, sure. Okay, so debt. What about the timing of debt? So when would you, Zinx, pull the trigger on leveraging up? Would you do it the moment we're at a sub 1M NAV, or would you wait for things to settle? Where's your mind at on that?
I'd do it as soon as we could get the right terms for it. Bitcoin is at a favorable price right now, I think. So as soon as possible. I don't think we'd have to time it at all, really. The good thing about Smarter Web is obviously it has an operating business that is profitable and can cover some costs when so I think as long as the debt is perpetual, and I think there perhaps is some options available to do that, why not? When would else be a better time when Bitcoin's trading at this price? So yeah, why
Sure.
would you think to do it in a different time? Or
No, I guess. I mean, this was more my thoughts around equity raises back when we were above a 1M NAV. That timing them while sentiment is still draining away from the sector, and not just SWC specific. If it was SWC specific, then pull the levers, right? But if the sector is out of fashion, then raise money while you can, and then save some things up your sleeve for when things have settled down a bit, to try and then get it all moving again, as opposed to like the equivalent of like catching a falling knife. Does that make sense?
I hear what you're saying. Like strike when the momentum's it will have a greater impact when the ball is rolling. But then again, I'm of the opinion that perhaps sentiment won't change too much until Bitcoin itself starts moving. So if we can acquire the Bitcoin at a cheaper price now, then why not? That's
Hey
how
guys, can you hear me now?
Perfect.
Right, I'm really sorry about that. Apologies.
That's okay. That's loads better. Jamie, we were just sort of finishing up a conversation, but good to get your input about the timing of leverage.
Yes.
So, is it just as soon as you can get the access to it, or is there a potential for timing it?
Yeah, correct. So from my perspective, so first of all, just to go back to the original question with how it works. So, I've obviously got a background in institutional crypto. So for those who don't know, the way that it works is that a lot of custodians and exchanges, but primarily custodians now, have dedicated lending desks, and they lend to their customers for a variety of different reasons. And obviously within that range, customers have different tierings based on the amount of Bitcoin that they have, their credibility, their regional jurisdiction, etc. Some rough numbers here to help frame it. So at the moment, where we're seeing rates on an annualized basis are around 10%. For some really strong institutional clients, you can get around 9%. So that's obviously if you want to borrow $1 million, you have to pay back 90,000 to 100 grand. The LTV, or the amount of collateral that you're required to put up, is normally around 60 to 65%. So what that means is if I want to borrow $1 million of fiat, I have to put up 650,000 worth of Bitcoin as collateral. And then that subsequently moves depending on the price of the Bitcoin and if there's any margin calls. So from my perspective, or from for education, remember the collateral or the Bitcoin never actually leaves the custodian anyway. So it's already sat there. So it's sitting there doing nothing at the moment. So a lot of these custodians are trying to build lending desks because it's for them one of the best areas in order to obviously get fees and to then build ancillary services around the clients that they service. So the way that it would work in practice would be client X would go to the custodian and say, hey, we're thinking about borrowing within this type of range. Could you guys give me a menu or a matrix of how it would look depending on the different levels of duration, depending on the different levels of collateral that we could put, and a variety of different LTVs as well. And so some of these will be fixed. It could be a fixed rate, which tends to be the standard practice. It could be floating, but normally for institutions and for the lenders, they like to have it fixed. That's the preferred method. So once someone has this specific matrix, they'll then be able to decide what's best for them. There can be a negotiating period for individual bits of criteria. They'll then look to strike the deal, sign the MLA, the master lending agreement. And so, yeah, that, for instance, would be how it would work in practice. And again, this is standard practice across all types of institutional custodians and institutional market makers, and obviously prime brokers as well. This is a very, very common practice within crypto, not just for institutions, but for high net worth individuals as well.
So Andy Smith has just put in the chat, is this why Andrew has done this new tie-up with Coinbase?
Well, that's probably just because obviously they're the main custodians. I think they hold strategies, Bitcoin as well. Actually, eventually, I would like to see that move to a British company when the time is right, because it kind of makes sense to me that these local champions have their Bitcoin in their own countries. But obviously, Coinbase is far ahead when it comes to this sort of stuff. So it's probably better right now to keep it with them.
Yeah, I don't have any information on Andy's question, but I think, the point I was trying to flag is how would this actually work in practice? One of the key things to highlight is that these types of deals can move fairly quickly and can be structured depending on the MLA, which is the master lending agreement, where someone looking to explore something like this. This for me would probably be the route that they would go down if they were going to do it, because they obviously have Bitcoin sat with custodian already. Whereas if they were going to go to, say, a traditional bank, say a UK high street bank, etc., the terms would likely be much higher. You'd be dealing with people that were probably less crypto friendly or less crypto savvy, and there would potentially be a lot more clauses around any specific loan. But
Sorry, can I just add, like, in that situation, if SmarterWeb were to do that, obviously the downside would be, if Bitcoin for, halved in price, they would have to add more Bitcoin as collateral in order to, stop it from.
Absolutely. So there would obviously, let's just say Bitcoin was to have another drawdown, that depending on whatever the terms were, there would be a subsequent margin call where it would need to be topped up. So really it's trying to structure something that gives the right amount of size for SmarterWeb. Again, this is all hypothetical, for SmarterWeb to be able to get what they feel is the right amount of Bitcoin yield for this specific quarter to keep what they feel is like a sustainable uptrend, versus, and then on the right terms, which would effectively allow one to have what they feel is an attractive or a competitive rate in terms of the amount that needs to be paid back, but also in terms of the LTV, in terms of what would the level of the drawdown of Bitcoin need to be before they have to top up. So, they've obviously got 2,500, they've got 300 million, give or take, worth of Bitcoin there. Clearly, from my perspective, they won't all go out and use everything in one go. There may be a period whereby one could assume they may go through a small exercise to get everything working, to see how it works, to maybe test market reaction, see what people think, etc. This, from my perspective, could be like a next step into seeing how that could work. Does that make sense?
Yeah. Okay, so moving on to it's been a hot topic for a little while because Andrew started dropping hints back in August, but the LSE uplisting. From my perspective, and obviously I don't know the inside running and prospectuses and all that kind of stuff, because that's all super secret inside stuff. But from what we know from the outside, that it looks like the one piece that we're waiting on is the recruitment of the final non-executive director to complete the board as the requirement. Otherwise, to me, it feels like we would have already had the uplisting announcement. What do you guys think on that?
So the thing is, I thought this was covered already. I thought we already had the sufficient criteria met, and Nick, who usually does his due diligence very well, made a comment saying that in fact we need someone else. But then he came back later saying that actually it was fine already. So I actually don't think that's necessarily the problem right now. But I may be wrong. You know, it was a while ago now since I last had a look at it, but either way, I'm hopeful that we can get an uplisting before the end of the year. But with sentiment right now with the market, I don't think it's as important or as it's going to have that much of an impact as it would have done back in June, for example. But still very important for the company, nevertheless.
Yeah, I don't have a strong view on this point, James. So apologies if I can't add any additional color here.
No, that's cool. It was just something that we know is ticking on in the background, and if you guys had anything to talk about it, then great. But sort of off the back of that, I know Zink's just said I'm not sure it would make that much difference in the current sentiment. Andrew and Jesse have both said they've been doing countless podcasts and stuff recently, that there is essentially a pipeline of funding available upon uplisting. Does that not get you excited, Zinks?
Yeah, it does. But now, obviously, where the market is right now, the question is, the funding. If we're below 1 MNAV, what's the terms going to be? I think the prospects of funding is good when the company's in a good place or share prices, at a sufficient MNAV. What would funding look like now? If that's what I'm thinking about. How would it actually work? How would you do an equity raise when we're trading below 1 MNAV?
Well, yeah. So I was thinking, back to my sort of timing of leverage, etc. Leverage at the right time, LSE uplisting, get the MNAV above 1, do a raise.
If it works, it works. that's the difficulty with these Bitcoin treasuries. Until they're able to reach sufficient scale and are able to have MNAV agnostic ways of raising capital like the prefs, it is difficult to see how essentially you just have to wait and see, because we could get an uplist, could add leverage, and it could still be trading below 1 MNAV. Then what do you do?
Yeah, exactly. I mean, I think as well, all these are all hypothetical situations, but sorry, just to pivot slightly, I think one of the things is that we're obviously in a big period of learning at the moment. It's still not even been 6 months since we did the IPO, and certainly I think when we look back from where we came, it's SmartWeb has exceeded most people's expectations, certainly in terms of what they've achieved over the course of the last 6 months, and going through a period of transition at the moment, both in terms of what the identity looks like given current market conditions, what's going on with Bitcoin, etc. There's a lot of it's a very delicate balance at the moment, and I think so far the company's done a fantastic job in terms of trying to manage that. And so, one of the things, that I've been particularly pleased about is that there is a lot of constructive dialogue and conversation going on within the community about different things that we can do and different ways that we can potentially look to continue to raise funds to continue to purchase Bitcoin. What does it mean if we go sub 1x MNAV? What does it mean if there were to be an uplisting, etc.? But the thing that I would implore most people is just to have, again, just a little bit of patience as well, because the sentiment can turn extremely quickly, just as how quickly as it turned in terms of when we started rolling over from June to now. It can quickly just as inflect, and all of a sudden, like, all these conversations that we've been having, effectively then just dissolve, and we're back to where we were previously in terms of much more attractive MNAV levels to do the equity raises again, etc. So from my perspective, I still think we're in a very, very strong position. And, for now as well, from my perspective, not everything has to be done immediately. Sometimes the best things to do are actually to wait. There's nothing wrong with actually waiting. And that's not passive waiting, it's active waiting. So it doesn't mean that nothing's being done in the background. It still means that the company are engaging with various stakeholders, whether it's the community, shareholders, potential investors, etc., to put together a variety of different things to discuss with regards to strategic implementation, but nothing actually has to be executed or acted on. And sometimes maybe that actually could be the best thing to do, is actually just to sort of sit and wait, especially during this period of sort of market uncertainty, which feels like it's being very macro-led. I'm not sure, Zinks, if you've got any sort of thoughts on that, but just wanted to reiterate that not everything has to be done immediately.
Yeah, no, I agree, and I think that relatively the relative strength of Smarter Web has actually only increased in this bear market for the Bitcoin treasuries. In fact, I think previously everyone was going down the risk curve, but now in times like this, people perhaps can appreciate strategy far more because they have that MNAV agnostic way to raise capital. So I think Smarter Web is going to benefit once sentiment in the entire space changes. We're not going to have a scenario where Smarter Web's successful, but Metaplanet and Strategy are not. So, like Jamie said, perhaps we just have to wait for the wider market to pivot. But with that being said, I still think that the relative strength of Smarter Web, especially as its position in the UK, is just far stronger than what it was previously, because the scale that we were able to reach before this happened has allowed us to have 10x more Bitcoin than the next person, the next company.
Yeah. And obviously the Bitcoin per share has been consistently moving higher as well, and certainly that's one of the things that Smarter Web management, I'm sure, working on, is like, how do they very succinctly put together a message that differentiates them from other competitors? Because clearly what we saw in the US was that there was big saturation, and a lot of these Bitcoin treasury companies got sort of banded under the same umbrella, and it was very hard to distinguish in terms of what was quality. And then that got muddied by a lot of these Ethereum competitors coming along, the Solana competitors along, which then obviously drew attraction, rotated capital and attention away as well. We haven't seen that in the UK. Everything's sort of been primarily Bitcoin focused, but again, it's trying to get a very succinct message in terms of what's been building in the background, in terms of the Bitcoin per share progress, the operating business progress, the ongoing building out of the organization, etc. But I do think one of the things to flag, and sort of just moving the conversation back slightly in terms of sentiment, it is worth flagging that when I was at DAS conference this week, even though Bitcoin was close to all-time highs, that doesn't necessarily also mean that sentiment in terms of Bitcoin is also at all-time highs. They're not there's not that one-to-one correlation. So I actually went around speaking to a variety of asset managers, hedge fund managers, etc., saying, look, on a scale of 1 to 10, if 10 was max bullish in terms of you think the market conditions and setup are super constructive going into year end, where do you think we are? And most people were sort of like around a 7. to a 7.5 at the moment. So, you know, from my perspective, even though we're at even though, you know, I know there's been a little bit of pushback in terms of the business model, saying, well, you know, Smarter Web, if they can't raise money when Bitcoin sentiment or Bitcoin's at all-time high and sentiment's at all-time highs, then, you know, what does that say about the business model? I think it is important to have that nuance that actually, despite where price is, there is still a little bit of a disconnect in terms of sentiment. So that for me gives Smarter Web some room to move forward in the future over the next few months.
Yeah, and then just kind of linking into the sort of have patience thing. I kind of wanted to talk a little bit about time preference. So if we're all sat watching the charts, watching the ticker, whatever, minute by minute, that actually makes us have an even higher time preference than perhaps we naturally would have done if we were out touching grass, right? If you bought into this for a, I don't know, 1 month, 2 month turnaround, then, you know, sure, this is even more painful if you bought in back in June, July, whenever. I'm not saying it's not painful if you've got a longer time preference, because it still is, right? But from where I'm sat, I'm thinking, well, you know, 10 years time, 8, 10 years time, this seems like a no-brainer to me. Bitcoin's only going to go up. And, you know, Jesse put it much more eloquently than I'm going to in his podcast yesterday, about deserving a premium, even if you're only delivering, you know, a 1 or 1.5% per quarter yield on your Bitcoin, because compounding that over a time period and Bitcoin's CAGR, that's sort of insane gains, right? Zinks, what do you think?
I think definitely having a lower time preference is a must. And to put it into perspective, when I first bought MSTR in 2020, it made an all-time high in 2021, and we did not see another all-time high. It didn't surpass its all-time high from 2021 until 3 years later in 2024. So that is 3 years of, you know, holding, you know, a company. And, you know, if you've been in Bitcoin for more than one cycle, you've been through this already. Of course, it's a bit different now because, you know, Bitcoin's not necessarily in a bear market, and it's, you know, time frames is, you know, sped up with these Bitcoin treasuries. People want to see, you know, price going up every week, but, you know, the reality of the market is this, that you have to be prepared to hold your positions for years, really. You know, in TradFi, they say, you know, don't invest with any cash that you need within the next 5 years, for example. And I think you just have to roll the punches. And, you know, Bitcoin itself, I know we're close to all-time highs in the USD and in the dollar, but when you actually denominate it in gold, we're actually quite significantly below our all-time high, which is how I prefer to denominate Bitcoin in, because, you know, the dollar's just been debased extremely quickly. So if you look at the gold price, you know, Bitcoin will have to cross well over $160,000 now for it to be at its all-time high in gold. And I think we barely even had any sort of exuberance or, you know, bull market feeling for Bitcoin itself. So yeah.
Yeah, I completely agree on that point as well. I mean, think one of the things from my perspective is when I was at this institutional summit this week, you know, people talking about the long-term story of Bitcoin. This is not new, but, you know, a lot of those targets for 2030 that are being still publicly stated are $1 million by 2030. You know, that's guys like Fidelity talking about that, ARK, BlackRock, Coinbase, variety of leading figures within the industry going on and actively saying on the take that that's where we're going to be within the space of, you know, effectively, 4 or 5 years. And so if you can have that time preference, then from my perspective, I think you are going to be in a good place. But that's not to discredit all the frustration that people within the entire sector are feeling. And I think it would be a disservice to sort of not acknowledge that. Everyone's in the same boat. There's a lot of people that bought too early. There's a lot of people that didn't sell when they could have, and there's a lot of could have, should have, would haves from everyone. But I think the one thing to go back on is, and to fall back on, is the fact that if you fundamentally believe that Bitcoin is going to compound over the course of the next 5 years, and obviously within that there will be volatility, there will be drawdowns, and that is because of consistent fiat debasement, which global bankers are consistently saying they're still seeing, then you have a very strong chance that you are going to be on the right side of the money over the long term, because Bitcoin will appreciate. And just by default, so too should these Bitcoin treasury companies get pulled up in tandem. And clearly there will be a spread in terms of which ones outperform and underperform. But I do feel that is in its terms a very solid anchor to keep going back to.
Yeah, I just want to add as well, like, the Bitcoin power law, which is not as bullish as $1 million by 2030. 2030 has it at $500,000 and has it at 1 million in 2033.
Mhm.
So you should only really, to be honest, be buying these Bitcoin treasury companies if you have complete conviction in the underlying. Otherwise, in times like this, you're going to struggle. So you need to have that conviction in the underlying. You need to have conviction in Bitcoin, know what you're holding. And the last point I just want to add is, even though the share price is down from its all-time highs, since IPO it is still up 26x. So it's not like the company hasn't done extremely well in terms of share price this year. It's just from its all-time highs, obviously it's down significantly, like all the Bitcoin treasury companies.
Yeah, I think that's a really good point, Zinks, to look back, because it is so easy in hindsight to see. But I think certainly if people were going to ask at the end of April when we did the IPO, what would be your sort of knock out the park price target? And I think most people would have said if we got to 100p, that would be pretty. That would be a really decent result. And I don't think anyone expected, obviously, the level and the velocity of the rise, not just within smarter web, but the entire sector as well. So I do think, like you said, you sort of have to reframe it when you look at it. I think it's what's been painful, it's just sort of where it's come from. But if you actually look at what it's done since IPO, it's still one of the best performing equities globally. It's still one of the best performing IPOs in the UK. It's still been very, very successful, all within that 6-month period.
Yeah, I can't remember which year Zinc said it gets to $1 million, but I'm kind of looking forward to being able to draw that straight line chart, which takes the volatility out, kind of in 8 years' time or whatever. And just going, it went from point A to point B, and it was pretty wild along the way, but how amazing is that kind of thing?
Yeah, exactly. And again, I know we sort of come back to the volatility, but this is I'm using the quote here from Michael Saylor, that the volatility is a feature, not a bug. And in order to have the outsized returns, you have to obviously be able to take the significant drawdowns as well. And again, it can be very frustrating and very painful for a lot of people, especially those that have been in crypto and are used to those types of cycles. It's not easy for a lot of people, but that is really what gives the juice when the sentiment inflects, and we do have that period where momentum is running. One of the things I also wanted to mention, what from my perspective personally, what gets me up in the morning about smarter web is the fact that we've got a very unique mission here, right? In the UK, it's still very, very difficult to buy Bitcoin ETFs or Bitcoin exposure if you're a retail holder. Now, I know we know that, but a lot of people still within Asia, Europe, and the US don't actually recognize that we're in this very, very specific category. They still think it's very easy for people to be able to get Bitcoin exposure. And they also don't recognize how difficult it is to be able to buy it in terms of on exchange, i.e. to send money from your local UK bank account to an exchange, it's not particularly easy. And so Smarter Web, from my perspective, has a very strong mission here to what I hope will be to get into a variety of different trackers that effectively a lot of UK pension funds hold, asset managers hold, and people indirectly, and without some of them, a large proportion, without even knowing, subsequently then have access to the best performing asset in the world. And, you know, to be blunt, there's not a lot of great stuff going on in the UK. There's not a lot for us to shout about. And so this for me is a big thing. And it's certainly, from my perspective, you know, one of the things that I think that the community galvanizes around. And I think it is worth re-highlighting.
Can I just add to that as well? You put it brilliantly. I am completely optimistic and bullish on Smarter Web long term. The short term stuff, who knows, right? We can discuss these things, analyze, make predictions. But I think it's very clear that the route to getting onto the LSE and then the FTSE 250 and then eventually the FTSE 100 is actually, quite easy for Smarter Web relatively, because we have Bitcoin. Even if we traded at, our NAV, eventually it's only a matter of time before we qualify for the FTSE 250. And with automatic inclusion, it's just, it's not a political process like in the US. It will happen. And, all Bitcoin needs to do is double in price, or, trade over $200,000 or something like that, and we would be able to automatically qualify into the FTSE 250. And I think once that happens, this company will then be able to, be on certain desks of these fund managers, and because a lot of people don't want to touch a stock that's trading on Aquis, to be honest with you. And the credibility, the institutional credibility, all sorts of institutional capital will open up to Smarter Web once it gets on the LSE, once it's in these indexes, not just the passive flows, but also the active flows from people that want to get outperformance. In the UK, some fund managers have mandates where they can only buy, UK equities, for example, on certain exchanges, in certain indexes. And if you want that extra juice, you're looking at the FTSE 250, what company are you really going to pick? JD Sports? So
yeah, you make a great point there, Zinks, and it's worth re-highlighting again why Smarter Web will be a very unique stock when or if it does get listed at some point in the future. Because one of the things that the UK is starved of is beta, or volatility, in terms of its equities that it offers. Because if you look at the FTSE 100, it's arguably the most defensive major 100 index globally. Like, all our top stocks are defensive stocks. They're either pharmaceuticals, they're consumer companies, they're utilities, they're tobacco companies. We don't have an index construct like the US, which is predominantly tech heavy. So what that means is that it's very, very difficult for active fund managers to outperform, because they don't have a huge amount of options. The stocks that provide beta are probably things like the banks and the miners, but outside of that, it's very few and far between. We don't actually have any great tech companies. So there's a big place, or there is a big gap for a stock to have a much higher volatility profile than the entire index, and a variety of other stocks as well. And I think that's what's going to make Smarter Web, what makes it such an interesting prospect, for the future, in terms of what its plans are as it grows and starts to get included in various other indices, if that happens.
I just want to add one just quickly. The FTSE 100, the last 10 years, the CAGR has been 5%. So, you say defensive, I say extremely boring. High dividends, there's nothing in there that you really want to have in your portfolio if you want outperformance. So, there was a few times earlier in the year where Smarter Web was the most traded stock on one of the biggest brokers in the UK, and this was on the Aquis exchange. People on Trading 212, for example, couldn't get involved. And I think for the first time in the UK, once we get the uplisting, there's going to be a stock for, you know, everyone to sort of rally around. In the US, they have Tesla. They got all sorts of options available to them. You know, in the UK, there's nothing to get excited about. So when that does happen, you know, SmarterWeb's in a good place to be that fun stock, and the benefits that will come with that should, you know, be huge.
Yeah, exactly. And you know, there's still a huge amount of people outside the crypto sphere that don't even know about Smarter Web because it might not even be accessible on the stock app, trading app that they currently use. And as you know, as it grows in terms of profile and starts to come into new distribution methods via different trading houses, different trading apps, that naturally is then going to help the community to grow. And you know, it does, like you said, the identity does fit in terms of trying to get Bitcoiners, you know, younger generation around something that they can get behind. That's interesting because, like you said, like in the UK, again, like when you look at our top stocks, like what are our top stocks in the UK? They're things like, you know, Glaxo, Unilever, Diageo, you know, LSE, British American Tobacco, things like that. You know, there's nothing particularly interesting that I think people can get behind.
And on that note, I think we'll call it a day there. Thank you very much, guys. Really appreciate you taking the time to share your thoughts on, you know, where we're at the moment and what the potential future holds for us. So as shareholders, is there any final thoughts that you'd like to add?
Yeah, I wanted to say thank you, James, for everything that you're doing at the moment, because I know I've said it before, but you know, consistently putting together the different content with different people coming on and being there and sort of being an anchor to get all these different types of media out. It's really appreciated, and you've done a great job. So really appreciate that. Thank you.
Definitely. Yeah, I like to echo that, you know, especially in the days where, you know, the market's like this. I think, you know, essentially everyone flees the ship, right? And it's just the same names that's, you know, just holding it down, planting the flag. And so, yeah, you know, James, you do a great job. Jamie, everyone else in the community, still posting in the community as well. You know, we are the base, and we're holding it down for Smarter Web. So,
yeah, exactly. And shout out to everyone that's still there as well, because I do think the community is being extremely resilient, and you know, given everything that's gone on, and I think that's like a big testament to the community belief, what Smarter Web's trying to create, to Andrew and all the effort him and Jesse are putting in. And you know, I know it's been painful, but you know, I do really think if you look back from the top down perspective, you can see a path whereby Bitcoin moves higher, a lot of these companies moves higher, and there's some, you know, light at the end of the tunnel. And from my perspective, it's just a question of when and not if. So having these regular dialogues is super constructive. So thanks, James, for continuing to put them together.
For the record, I bought some Smarter Web today, so I'm not going anywhere. I'm adding to my position. I quite like where the stock is right now. So, not financial advice, of course.
Right, and thank you to both of you for all the analysis that you've done along the way and the community, and we'll call it there. Have a good one, everyone.